market and the kind of subscription figures, the listing premiums that some of these recently listed companies have seen. And to take that conversation ahead, try and understand how the primary market is shaping up and what should you be doing when the IPO flurry and the pipeline looks so solid. Let's welcome on board Mr. Sudip Bandyopadhyay, market expert, joining us. Sudip, hi, good afternoon. Good to be speaking with you. And as I was just seeing so much new paper in the market, how do investors navigate amid all of this fresh paper coming in? What's the kind of outlook that you have on the primary markets? And of course, any IPOs that are looking good to you?
Well, I have a very positive outlook on the primary market. That's point number one. I strongly believe that more and more good paper coming to the market increases the depth of the market, which in turn works for the market in the long run. The depth of the market is very important to ensure healthy trading. And that's what exactly is happening with more and more good quality papers coming to the market. Now, once an IPO comes to the market, it's a function of the quality of the stock, quality of the business, as well as the valuation at which the paper is being marketed. And one has to, as an investor, look at the quality of the company, business, as well as the valuation at which the stock is coming. I think this is extremely important. And, as you rightly said, recently we have found a lot of good quality companies coming to the market and at a valuation which I would say is reasonable. Is it cheap? The answer is no. Is it overly priced? The answer is no. So they are coming at reasonable valuation, and the post-listing gains as well as the amount of oversubscription is a clear indication to this fact.
Understood. And, I just wanted to take that conversation ahead with the post-listing gain point that you have made. Something like a Bihari Lal Engineering, 76% listing day gain, and almost as much as Bharat Coking Coal, one of the biggest IPOs that we've seen ever in the history of the primary market. Indo-MIM has done well, Shiprocket, MV Electro. So, what I'm trying to understand is, do you believe that a lot of these primary market investments are driven by listing day gains, or do you believe that there is fundamental underlying strength when it comes to some of these IPOs? Just give us a sense of, if you have the insight on how many IPO investors are selling as soon as these listing day gains happen, they're booking their profits and exiting, and how many of them continue to hold ahead as well?
Look, say, I think there are multiple category of investors. Some investors very clearly look at listing day gains and they invest with a specific purpose of exiting on the listing day. Now, you can't find fault with that logic. That's the model they are following. And, by all means, they look at the kind of gray market premium, the oversubscription numbers, and things like that, and decide that, what kind of demand it will generate on the day of listing. And that's how they invest. But leave aside that category because they are in very, very, for just that momentum and the trading gain. But fundamentally, some of the good quality stocks are coming to the market. And to your question that, is it only listing gains? Is it only the excitement around listing? Or are some of these companies fundamentally good? I think we have got fantastic quality stocks in terms of Indo-MIM. I think it's a fantastic company, differentiated businesses all across the world and expanding. And look at the Q1 numbers which came post-listing, fantastic set of numbers again. And they're maintaining the momentum post-listing. Of course, there was a massive gain and the momentum is being maintained. So I think this is extremely important to ensure a healthy development of the market. And I think that's what is happening. I will also talk about Milky Mist. I would talk about, of course, Bihari Lal got listed yesterday and there was massive excitement. Shiprocket got listed and there was massive excitement. So some of these are fundamentally good companies. Listing day gain is one part, but will they perform and continue to outperform the peer group in the long term? The answer is yes.
Understood. And yes, like you mentioned, Sudip, lots of good listings that we've seen recently, fundamentally very strong companies. I was just looking at the balance sheet or the P&L of a bunch of these companies that we've spoken about. Temsens, that's opened yesterday, is seeing such a good subscription right now, as is Gaja. Augmont is also doing very well. So, I'm just trying to understand, As I have pulled up the P&L of all of these companies, most of them are profitable. The tides are turning in terms of the kind of companies that are coming for listing. Earlier, we had massive loss-making companies coming towards listing and the street was divided. Right now, the companies that are also coming towards the primary market are fundamentally profitable, most of them, before they come. What is your view on that?
Well, I think it's a very good development. I must say that. Look, at one point of time, you were getting companies like Paytm, which were massively loss-making, coming and listing at a significant premium. And look at what happened. Listed markets look at companies differently vis-a-vis private markets. Private market looks at long-term potential and tries to value a company. I mean, there is no harm in that. But that's not how listed market looks at companies. We look at, from the listed market point of view, the profit multiples and profitability index and growth in profit, growth in margins. These are the things which listed companies, listed market participants look at. So yes, the development today's recent development where only profitable companies are coming for listing is a very good development, and I think that ensures that they continue to outperform post listing, and investors get rewarded. That ensures that more and more investors come to the IPO market and benefit out of it. So it's a very clear trend shift, and it was right. In fact, the companies which were loss making came to the market at a premium. They learned their lessons. If you see what happened to most of them, they suffered very, very badly. And only after 4 or 5 years, when they're profitable, they've become profitable, and there is a promise of future profitability. They are coming close to their listing price. And 4 or 5 years have gone, investors have suffered, everybody has suffered. So it's a very good lesson, I think, which many of these companies have learned. And that's the reason why I think investment bankers also encouraging only profitable companies to come to the market.
Understood. So, Sudip, on that note, the 3 IPOs that are active right now, Augmont Enterprises, Temsens Instruments, and Gaja Alternative Asset Management, your picks, would you be subscribing to any of them?
Well, I think, all 3 are completely differentiated companies. And actually, there are no peer comparison possible. Look at Augmont. I think they are into bullion trading, bullion and silver. So I think it's a completely different. 90% of their income comes from that, and about 10% comes from retail trading and things like that. So it's a differentiated company. It's a profitable company. The margin in this business, because it's a bulk business, is less than 1%, and one has to understand the business in its entirety to appreciate that. There were some little cash flow negative situation last year, but I think things are improving. And this IPO, a part of it is fresh capital, part of it is offer for sale. So if you are a little aggressive investor and believe in long term, I think this is a good issue to subscribe to. Look at the other companies like Temsens. Again, it's a differentiated company. They are about 30% of their income comes from the global markets, balance from domestic market. They are trying to do a lot of things interesting.
Right.
I think from a long-term perspective, again, it's a good company. Gaja Capital, unique company. It's in the private equity business and business for quite some time. Their investors, current set of investors, come from 30 countries across the world, and they have a very good track record of providing almost about 3 times plus return to their LPs over the years. Now, it's a fantastic track record. This money will be used, and this is probably first time retail investors are getting an opportunity to participate in a fund which is investing for long term. Normally, the private equity subscribers are institutions and other family offices, so not the retail. Now here, retail is getting an opportunity to participate. So again, differentiated issue. People having a long-term outlook can definitely invest in Gaja with a long-term view, very clearly.
And lastly, Temsens. Sudip, your view on that?
Yeah, I just mentioned Temsens. It
Sure.
derives about 30% income from international market, differentiated business. Again, aggressive investors with a long-term view can go for it.
Right. Okay, so that's the recommendation coming in on all the 3 active IPOs. Sudip, I wish we could take this conversation ahead. Due to paucity of time, I'll have to let you go. Thank you so much for your time.